Welcome to Unlocking the Equity in Your U.S. Home. If you've ever been in a situation where you needed access to cash for an emergency, to make necessary home improvements, or any other purpose, accessing the equity in your U.S. home may be an option for you to consider. If you own your U.S. home outright, or have paid down a good portion of your mortgage and your home's value has appreciated, you might have some options. A refinance or a home equity line of credit could provide you with U.S. cash without the need for foreign exchange costs or liquidating your Canadian assets. First, let's look at refinancing. It's simply opening a new home loan to pay off your old mortgage loan. Because there aren't prepayment penalties on U.S. mortgages, you can pay off your old loan without worrying about breakage fees. If rates have dropped since you bought your home, you might find that you end up with a lower monthly payment. With a cash-out refinance, a higher value loan replaces the original loan, and the difference between the two loans is distributed to the homeowner as cash. And who couldn't use some U.S. cash? A refinance can allow a borrower to get a new mortgage loan with new terms for up to 80% of the value of the home. Like your original loan, there are closing costs associated with refinancing, but you may be able to cover some of them with the proceeds from the refinance. Another way to tap the equity in your U.S. property is through a home equity line of credit, also called a HELOC. This is a secured line of credit borrowed against the equity built up in your property. Unlike a refinance, using a home equity line of credit gives you access to funds when and if you need them. You can use it for U.S. expenses, that boat or new car you've had your eye on, or even move the money to Canada to pay off debt at home when the exchange rate is in your favor. And even better, similar to a refinance, you may be able to borrow up to 80% of the value of the home through a HELOC. With no minimum balance or usage requirements, you can take the money out when you need it, or leave it in case of an emergency. You can even get multiple HELOCs over time if your home value allows. A HELOC is also different from refinancing because the interest rate is in addition to the prime rate. This means the amount of interest you pay will fluctuate up or down along with the prime rate, and you'll only pay interest on the part of the credit line you use. If using your U.S. home equity interests you, the first thing to do is estimate the value of your home so you can calculate the approximate equity you've built up. For a ballpark figure, you can research selling prices of similar homes in your area using any number of home selling sites online. Alternatively, you can reach out and speak to your real estate agent, who likely has a good feel for current pricing. Once you know your equity, you'll have an idea of how much U.S. cash you might be able to access, up to 80% of the value of the home. Get started by reaching out to a cross-border mortgage advisor who can help you decide which option for accessing your U.S. home equity is right for you. For either option, you'll complete an application and be asked for supporting financial documentation. Once you provide all of your documents, the process usually takes about a month. Let RBC Bank be your cross-border guide, and you'll find funding your U.S. dreams are easier than you think.